Hi, 9 to 5ers. I'm Elizabeth Ajadi, host of 9 to 5 and everything in between. Welcome to another episode of the podcast. Today, we're going to be talking about home sweet home or investment dream, housing decisions for the new American. Here's the deal. Making a housing decision is never a one-size-fits-all.
As Yoruba would say, "Onokun woja."
There's not one way leads to the market.
Correct.
In this episode, we want to break down one of the most critical financial decisions many professionals face. The pros and cons of buying a home versus investing in a property, or should I continue to rent?
Honestly, right now might be the best time to buy in regards to the market,
right,
because the competition is less.
Yeah. Our guest today is Emmanuel Oloyede. He's a branch manager and loan officer at Green Lending, proudly serving Cleveland, Ohio, and the surrounding communities. Whether you're buying your first home, refinancing, investing in a second property, or expanding your real estate portfolio, Manny is here to make the process smooth, fast, and stress-free. Known for 5-star services, competitive rates, and fast closing, he brings a deep understanding of all home loan types: conventional, FHA, VA, USDA, and specialized investor programs. Plus, he offers a selection of other programs that you won't find anywhere else. So today's conversation is going to be very interesting and exciting for you, especially for young professionals and mid-level professionals. Stay tuned for this conversation. Hi, 9 to 5ers. I'm Elizabeth Ajadi, host of 9 to 5 and everything in between. Welcome to another episode of the podcast. Today, we're going to be discussing an amazing topic around real estate investment and owning your own property. Making a housing decision is never a one-size-fits-all. In this episode, we want to break down one of the most critical financial decisions that every professional, or not just professionals, everybody would make in their life. The pros and cons of buying a home versus investing in a property versus renting, touching on market trends, financing options, and just what goals that you have in your life. And on today's episode, our guest is Emmanuel Oloyede, who is a branch manager and a mortgage loan officer at Green Lending. He knows the full cycle of real estate lending from the start of your journey, whether you're owning, renting to own, whether you're trying to invest, and he can talk about different financing options that's available to you as a homeowner or an investor. So welcome to the studio, Manny.
Thank you.
So good to have you. But you know what? Before we dive into the conversation, help the guests get to know you.
Right.
Please do a brief introduction of yourself. Obviously, I've done the introduction, but I want the guests to know you. Let's establish some credibility, and so that they can stick with us and listen to the entire conversation. So please introduce yourself.
Well, first off, my name is Emmanuel Oloyede. Everybody calls me Manny, so I go by Manny. I'm a mortgage loan officer. I'll say this career kind of found me out of the blue. I started my career with, I won't mention any names, with a large corporation, where I got my licensing and all that fun stuff. I've been in this business for about almost a decade now. And over the time frame, I've worked with the banks, I've worked with direct lenders, I've worked with all form of, mortgage lending. And now I decided the retail lending is, the ultimatum for me. I've been in the retail, I've stuck to the retail lending aspect for the past 4 years now.
Explain retail lending for our viewers who don't know much about lending.
So there are different forms of lending. There is your regular bank that you would go to get your mortgage from. Those are, backed by the FDIC.
Yes.
And what that really means is most banks are restricted to what kind of lending they can do. In the aspect of there's some product you can find in the bank that you cannot find in the bank that you find elsewhere. There's also wholesale lending, which is your broker. And there is also retail lending, which is practically, or should I say, there's consumer direct and there's retail lending, which kind of have some similarities. Consumer direct are your call centers.
Okay.
So, not to mention any names again,
Mm-hmm.
there's several consumer direct out there. Those are the people that are blowing up your phone every day, calling
I
you.
see.
Yes, because those people pretty much are in the call center, and they use what we call a dialer to call multiple people at once.
Oh, I see. Until somebody picks up.
Correct.
Okay.
And retail lending is more of your local lender that is very much in tune with the community.
Yes.
That knows the local businesses and the local people in the community.
Right.
Also, retail lenders tend to have better relationship with realtors, which comes in as a perks to the borrower.
Correct.
Because now they know who is who and who can be of a great service to a specific type of borrower.
Okay.
So retail lending is, should I say, the in-between of consumer direct and bank lending.
Right.
Because the bank, you already bank at the bank.
Right.
So now you go to the bank for what you need. But if you need stuff like a product like a DSCR loan, which is a debt service coverage ratio loan, which is tend to be tailored to investors. Now, your bank doesn't do that.
Right.
Then you have to now fall to the retail
Shop
lenders.
through retail lenders. Okay, that makes sense. And now I have a better appreciation for it because I remember when I bought my house 6 years ago, I think it was through one of those call center mortgage banks because literally in less than a year they sold off my loan to some other carrier who then sold it again, and so before I landed with my current mortgage banker, and they've kept it over the last, I would say, 4 years, instead of bouncing me around.
Unfortunately, selling the mortgage, just talk on that topic, touch on that. Selling the mortgage, only very few mortgage companies do service mortgages.
Right.
So eventually, because there's a cap on how much a lender can hold.
Okay. Yeah.
So there's a federal guidelines to all of that. So a mortgage lender can hold to a certain amount of volume. Right. And eventually they have to sell it off for them to have room for more volume.
I see.
So only there's technically the big five that do hold for longer. So those are the people that will hold longer. But eventually, regardless of, but even the big five do sell off.
Yeah.
But regardless of who you do your mortgage with, there is probability for your mortgage to be shifted to someone else.
Oh, that makes sense now. And you see, I'm learning because I never knew that. Taking a step back, looking at the start of the year to this point, because obviously we're right around the midway point of the year. When you think about real estate, what can you tell us has shifted over the last 6 months?
A lot has shifted in the last 6 months. I'll say the borrowers and the consumers' mentality have kind of shifted. Compared to the last 4 years or 3 years, people were skeptical about buying in regards to the changes that came suddenly when with the interest rates rising and of course less sellers credit in the market, less concessions available to home buyers. People have tend to accept the reality to be the normality, which is the rate is going to be the rate. We can't control that.
Correct.
It's about controlling what we can control in regards to our down payment, how much can we save up, our income, and our readiness, essentially. So what it's become really is the mentality has changed. People have accepted the reality for normality, like I mentioned.
Yeah.
And they're diving in. Yeah.
Yeah. That's awesome. I'm going to just read off some of statistics that I found online just in researching for this topic. Right now, when we look at home price growth, obviously U.S. home prices grown. Federal Housing Finance Agency says it's grown 4.7% in the in this first quarter of 2025. The average 30-year fixed mortgage rates remaining around 7%, depending on where you are, depending on your locality. There's so many factors to be considered when you think about these things. Affordability issues, that's also a thing because there is a demand supply issue in the market where maybe supply is low, demand is higher than supply. And so that creates an artificial inflation around home prices. And so it creates an affordability issue where people can not afford that dream home that they want, that American dream that they want. First-time home buyer challenges, again, because of the rising cost of housing, it's harder for first-time home buyers to be able to get that down payment. Although you will talk to us about some options like FHA and stuff. Just that renting/buying dynamic. Again, when you're looking to buy, you're looking at your income, your debt to income ratio. How much can I qualify for when it comes to a loan? And so you're looking at a lot of these factors, and they are informing your decision on whether you want to buy, whether you want to keep renting, what the timing should even be for you to do that. Listed.
I would say, so it's not buying versus renting.
Okay.
It's more of what works for me. I know people would could afford to buy that would rather rent.
Okay.
And maybe for the purpose of their jobs or maybe their career does not entertain them to permit them to be in one stationary place.
Right.
And there's the option of, I know people that would rather buy investment properties and not specifically a primary
For them
home.
too. Yeah. Okay.
And again, it comes down to what works for you at the moment.
Okay.
If you know you're going to be in a, should I say, city, a location for a longer time, buying just makes sense.
About how long?
I would say two years.
Okay.
About 2 years. I say 2 years because that's when capital gain comes in.
Start to come in, yes. Yes.
So after 2 years, if you sell after 2 years, you don't have to pay the capital gain.
Right.
But I'll say about 2 years, it makes sense to say, okay, you know what? I'm going to buy a home. Reason why, again, buying a home makes sense in that aspect. Only once in the history of home buying has the value of home gone down. Only once. And think about that.
Right.
Stock market, about every day, there's
Yeah.
fluctuation.
Yeah.
Either up or down.
Yeah.
Or any other type of investing.
Correct.
It's never stable.
Mm-hmm.
But real estate is always stable.
Okay.
The probability of losing is little to none. So it makes absolute sense.
That's a great point. When I think about the renting versus owning conversation, you know how people just say, you need to buy, you need to put down roots. Especially for us as Nigerians, like there's a tendency to look at the home that you have as the symbol of success. And if you don't have that, they're like, what are you doing with your life? I want to talk about specifically the new normal. We're looking at interest rates hovering around 7%. Where people like me who are around 3%, we're like, oh gosh, thank God. And I get this question a lot from people because I work in real estate too. So people tend to think that I know mortgage or lending. And I'm like, well, I'm in a whole different area of real estate. It's not the same, but I generally can give anecdotal advice. Like, oh, is this what we should expect? Like, what is really, interest rate is at 7%. That is a massive, that adds to your principal, payment overall. And so when I'm thinking about calculating the cost of buying, like, do you think I should be waiting? Do you think I should hold out that maybe the interest rate is going to drop at some point? Or should I just think about how to stack up my coins to be able to afford a house at the current interest rate?
So there is a common question in real estate. When is the right time to buy? Mm-hmm. Which is essentially what you just mentioned. Mm-hmm. And there's a joke around real estate that every realtor will tell you, now is the right time to buy.
Yep.
My answer to that is the right time to buy is when you're ready. I cannot sit here and tell you interest rate is going to drop tomorrow. And I cannot sit here and tell you in the next 6 months, rate is going to drop. Nobody has the 8 ball.
Yeah.
Nobody, not even the president can tell you that.
Right.
What it comes down to is, one, you can, of course, monitor the market trends. But then again, that won't tell you anything about the interest rate.
Okay.
And speaking of interest rate at 7%, so 7% interest rate is considered high. But when it comes to the average numbers of interest rate over the years, that's actually
pretty decent.
An average interest rate.
Yeah.
I'll say before should I call it the crazier times, when interest rate dropped into the 2%, 3%, the norm was 4.5%, 3%, 5% conventional, 4.5% conventional. That was the norm.
Yeah.
And, I don't know, COVID happened.
Yeah.
And we dropped into this frenzy of 3%. That happened for about 2 years or 3.
Yeah.
But we got spoiled.
We did.
When it comes down to when is the right time to buy, should I wait?
Right.
For the right time to buy, there's no one specific right time to buy.
Right.
Because the right time to buy is when you are ready.
When you are ready.
Yeah.
Yep.
So it's do I have my income together? Do I have my down payment together?
Right.
So it's about just when I'm ready.
When you're ready. Okay. Before we continue, I want to throw a scenario at you. So imagine a client comes to you, a professional couple in their early 30s. Let's call them Sarah and Tom. Sarah and Tom have stable jobs. Sarah is a marketing manager. Tom is an accountant. Combined, they earn around $150K annually. They've been renting for years, saving diligently, and have about $50,000 for a down payment and closing costs. They're pre-approved for a conventional loan, but they're feeling the pinch of current interest rates and the rising home prices in their desired suburban area, where a starter home is now averaging $450,000. They really want to buy a home for the stability and to start building equity, but they're concerned about their monthly payments and don't want to be house poor. They've heard about different loan types, but they're a bit overwhelmed. Given Sarah and Tom's situation, what are some key financing options you discuss with them, and what specific advice would you offer to help them navigate today's market and make their dream of home ownership a reality without stretching themselves too thin? Now, before you answer, I want to preface this with, this advice is not a professional assessment for you to look at yours and say, oh, boom, this is my situation, this is it. Financing depends on your credit score and so many other factors, your debt to income ratio and so many other factors. So I want to preface that so that you don't come back and say, Maddie said this on 9 to 5 and everything in between, but it was a lie. No, it's not. There are several other factors, but carry on.
I appreciate that. Everybody's scenario is different. Yes. That's why two people don't have the same interest rate.
Right.
You could check with your friends, your interest rate are probably different, because each profile is different.
Yes.
So many criteria that we look into, like Elizabeth mentioned, your debt, how much income you make, and, because your credit score, how you spend your money, which that's what that really relate to. But yeah, speaking with Tom and Sarah, there are two things Tom and Sarah can do. One is buy below your means. If you feel pinched, based on the price for the $450,000 home, which of course, one of the things I discuss with my clientele is not just the housing expense.
Right.
So buying a home is one thing. You have a life to live after you buy the home. So there is, of course, maybe you have credit card payments.
Yes.
You have car payments.
Yes.
You have kids, maybe. Life happens also. So you also don't want to be cash poor after you buy a home.
Correct.
And most times when you buy a home, you want to furnish the house.
Yes.
To a different tasting.
Yes.
Than what you had before.
Yes.
So now that comes into play. So in the case of Tom and Sarah, one is to don't buy your dream home first. Start with a starter home. That could mean a $200,000 home. That could mean a $300,000 home. But if you feel you are inconvenient at the price for your dream home, start small.
Correct.
Another analogy I like to use for people, I play video games to relieve stress.
Okay.
This is something I do once in a while. The last time I played yesterday. I got to play yesterday. But occasionally I'll get to play, which helps me kind of take my head out of the workspace and stuff like that. And again, I work, just to elaborate, I work hours and hours weekly. So help you take away your head out of the game. Yeah. However, analogy I use is when you play a video game, for instance, you don't start with all the powers and all the tools you need from the start of the game. Right. You start small and build.
You win gems along the way.
Exactly.
To buy tools.
If you're playing Super Mario, you don't start as the strong Super Mario.
Yeah.
You start as the small Super Mario.
Correct.
And as along the way, you gain skills.
Correct.
And you gain the burgers or whatever Mario eats to get bigger. And that's how you then win the game.
Yes.
Same thing with real estate. You don't start, again, very, very rare scenario. Someone start with the big leagues. But you start small, then build from there.
Correct.
First thing with Tom and Sarah, they start with a starter home. For instance, they buy a $200,000 home in today's market. Over time, they pay down their principal. Over time, the home adds value.
Yes.
Over time, they decide, okay, it's time to move to another home.
Right.
Now, you have equity, which you can take with you to put more money down on your dream home.
Correct.
Which then allows them have a lower monthly payment or even equivalent to what they had
with their starter
home.
That is a great point. I have a starter home, and a lot of people have asked me over the years, like, oh, would you buy? I'm like, no, I'm not ready for a $4,000 mortgage. Like, do you know what that would do to my lifestyle? Those are a lot of things that you need to consider. You touched on it. Like, are you still able to afford all your other payments? Because a house is just the bare minimum, of your expenses, and life happens. With the current climate, a lot of people have lost their jobs. So what's to say either Sarah or Tom would still have their job?
Right.
Not that I'm wishing it. Well, they're just made up people, but like anything can happen. Like in the last year, several people that had a stable federal job lost their jobs and suddenly did not have an income. So you need to take that into consideration of, I need to be a bit more conservative in, my spending. In the intro episode for the entire season, I did mention something about just reading the room when it comes to spending the money. No one is trying to tell you how to spend your money, but you need to understand that you need to be a bit more thoughtful. You need to be very, very thoughtful. You can't just say, that house looks good, it fits me, I'm going to buy it. Okay, good luck. And you eat Gary, and then you're going to be like eating unbalanced diet for the next few years. Like, you just have to be sensible when you're making that decision.
And again, there's a case of the blue suit, and blue suit really means some people want the blue suit, and regardless of your advice, they still want the blue suit.
That is correct.
So, as an advisor, it's not my money.
Correct.
I'm here to help you achieve your goal. Correct. Right? End of the day, I want you to make good decisions for yourself. Because what it comes down to is, one, my reputation is on the line.
That's true.
After you buy the home and then things get tough, it's many that did not advise you correctly. And it comes down to, one, let's make sure when you buy this home, you are happy every time I call you.
That is so true. That is so true. Because, not just at the point of buying, if they wanted to sell, would they be coming back to you
Most of my client are repeat buyers
Okay.
and are repeat clientele.
So when they sell and they're looking to finance a new home, they can come back to you.
Again, my business is very, very based on referral and relationship. And being a branch manager, that makes the difference with what kind of person you're dealing with, what kind of banker you're dealing with.
Correct.
It's like should I say, like every other profession, a doctor or a mechanic, everybody works differently.
Correct.
Right? You take your shop to your car to person A, they might tell you it's your brake light that is off, and you go to person B and they might tell you it's your brake fluid that is off.
I see.
So every person is going to advise you differently.
Right.
And everybody's going to see different things. So it's about relationship along the way.
Right.
So the way I advise my clientele is in a way whereby because I keep my book of business, I follow up, I stay in touch.
Okay.
Most of my clients eventually become my friends in most cases. And of course the end goal is whenever you hear the name Manny, or you come across my name,
you don't roll your eyes.
That dude really did me dirty.
Yeah.
You won't understand how we got into this home we're in. So I wanted to be, yes, it really did advise us to do this. And the advice that I gave really did make a difference in them making a purchase.
So I want to talk about the hidden costs of home ownership. We've talked about just the anecdotal things like, you have other expenses, but when it comes to like your mortgage payment and some of the other things that are inclusive in that payment, like what are some of these payments and how should we factor that into our decision making?
So most people know that you need a down payment when you're buying a home. Of course, there's some loan product that kind of makes you not bring that to the table. Like if you're a veteran or if you are buying a USDA home, so to say, those allow you with 0% down.
Okay.
But besides that, most people know, okay, I need to bring my down payment, but forget the closing cost. So there are two things to keep in mind when you're looking to buy a home. There is the expense of the down payment and there's the expense of the closing cost. Now, there are down payment assistance programs that can help with that. Okay. And again, most people, when they think about, I want a first-time home buyer program, they think about FHA.
Right.
Because FHA starts with FH, first home.
First home, yeah.
But that's not what it stands for, right?
It's not?
No. That stands for Federal Housing Administration rather than first-time home buyer. However, so you can use FHA even if you're a second-time home buyer or a third-time home buyer. It doesn't matter how many times you bought. You can always use FHA.
Interesting.
Most people actually use FHA for what we call house hacking. And what that really means. So house hacking, just to dive into that.
We're getting into the investment side here?
Pretty much, okay. Yes. So house hacking, just to dive into that, is pretty much when you use an FHA product to buy your primary home. Most people would do maybe a 2, 3, 4 unit home. Okay. By the way, the max you could buy when it comes to residential home is 4 unit. Okay. Anything above that is considered commercial. Okay. So you use that to buy a primary home of 4 unit, 2, 3, 4 unit. You live in 1 unit and have the other unit pay your mortgage. And after a couple years or a few years of living in this home, you go buy another 4 unit, 2 to 3, 4 unit as a primary home. Wow. And the space you had before, your departing home, you rent it out. So now you have another 4 unit. And then you get the opportunity to put down 3.5%. Again. So
I could still do a FHA?
You could always do FHA. As long as it's the primary home, you can always do FHA. Now, again, what you have to watch out for is you buy the home and don't live in it. Now, that is considered fraud.
That's true.
And that's up to 30 years in jail. For it. And to be very clear, when it comes to mortgages, mortgages is highly federally regulated.
Especially FHA.
Every product, really. Every product. Every transaction we do as a mortgage loan officer is federally regulated. But I hold a license to be able to operate in each state.
Okay.
And that is highly monitored to make sure you're not committing any fraudulent activity. To give an example, I won't mention no name. Recently, one of the top producers in the nation was actually arrested on the premises of advising his borrowers who were looking to buy investment properties to buy it as a primary home.
Wow.
So, and he and his assistant was actually arrested, and the probability of going to jail is really high.
Wow.
And this is someone doing over 200 million in volumes annually. So
that is crazy. Well, I mean, you know what? It goes back to what I always say on this is like the US government is always watching. So whether so there's no way you can cover your tracks. Like
just do the right thing.
Just do the right thing. Like it pays you to do the right thing.
Just do the right thing.
You know? Wow, that is crazy.
Yeah.
Wow.
Yeah. So like I always tell, it's about the intentions.
Yeah.
When it comes to mortgage, do you intend to live in this home? The answer is yes. Sure. We do the mortgage as described.
Okay.
So now, if you tell me along the way, oh yeah, I'm actually going to rent it out, then that's a red flag.
Yes.
We need to do it as an investment property.
Okay.
But yeah, outside, like I mentioned, you could do FHA over and over again.
Over and over again. Wow.
Regardless, as long as it's your primary home you're buying,
you
could always do FHA.
Okay.
And again, there's a fine line of, okay, I'm buying another primary home. Like maybe you buy a home today and 6 months later you're like, oh, I want to buy another primary home.
Oh yeah.
And another 6 months, another primary home.
Yeah.
And to be honest, they will come knock on the door to make sure you're living in that home.
Wow.
They would check.
I mean, why would anybody even call that type of attention to themselves? Like every 6 months?
You people could get ambitious.
You know what? You're right about that. You're right about that. Not everybody's sensible. But I mean, as we're talking about investing, you know, I'm thinking about investing in real estate property. You touched on it a little bit. Using real estate as your investment vehicle, as opposed to stocks or bonds. But the thing about it is people would like to think about the liquidity of it. You know, I want to invest in real estate versus investing in stocks or options or bonds or ETFs, whatever the case is. In my opinion, it's not as easy to sell a house. Although, given the current market that we are in, depending on where it's located, it might be as easy as you can imagine. Because I follow some realtors and I see like they post something within like a week, it's gone, it's off the market. So when you think about the liquidity of it, would you advise for somebody to invest in real estate versus all these other investment vehicles that are available?
No, I won't advise anyone to invest in any specific investment vehicle. It could be real estate, could be bonds, could be stock market, whatever the case may be.
Yeah.
Do what is more comfortable for you. I'll put it that way. As Yoruba would say, "Onokon woja."
There's not one way leads to the market.
Correct. Yeah, not one way leads to the market, which pretty much means there is not one way to do things. There's more than one way to skin a cat.
Yeah.
That's the American way to say it.
Yeah.
So that being said, you could invest in what makes you comfortable. Again, we have examples in real life of people that invest in several other things that has worked for them. Real estate just happens to be what I do, and that's where I can advise you on. So if you decide, okay, I want to invest in real estate, I can show you how to walk that fine line and how to proceed with that.
I appreciate that because, again, because you said earlier how stable real estate is for the most part and how, your equity just keeps growing. And it's just it's just more stable. That's all I'll say versus ETFs and bonds going up. Bonds are a little bit more stable as well, but like stocks and ETFs are a little bit more up and down. Like if you go into my only investment is mostly my retirement and my Roth 401k that I have, and then some mutual ETFs that I buy through my financial advisor. Like when I go in there and I see like a massive dip, I just log back out because like I don't have that energy to just withstand the
changes.
Changes. And so I consider myself an aggressive investor. And so my maybe investment profile is a bit more on the aggressive side. But then I'm able to see higher yields versus like somebody who's a bit more conservative might say, man, I'm just going to buy an investment property. I want to get my $2,000 a month rent from my renter and just be done. I know I have a stable amount of money coming in, which pays for the mortgage and stuff like that.
Yeah, you could be aggressive in both sides. I mean, now when it comes to stocks, unless you're a certain U.S. Government official, which I will mention in the next, you cannot pick the right stocks every time.
Right.
Your growth is not guaranteed.
It's not certain, yeah.
And I mean, I do have some investors, clientele that are really aggressive in regards to what they're buying and what they're investing. Some prefer to do for the long term. At least most of the investors I have right now is more for the long term.
Right.
And some of them don't even focus on the rental income itself. They focus more on the equity and the growth appreciation of the home in the long term.
Okay.
And of course, I do have those who focus more on the rent, and their goal is to have as much rental to where they're not working a 9 to 5.
Right.
Most investors would focus on the rent. Some focus on the appreciation of the property itself.
Right. Okay. Yeah. So again, it depends on what you're looking for. And like Manny has said over and over again, do what works best for you. You really have to think about your own goals, your own income, and
what's comfortable.
Yeah, what's comfortable.
What do you know best?
Yeah. And your appetite to, for, investment, what that investment profile looks for you. I wanted to talk about the interest rates again real quick because there was something at the tip of my brain that I was trying to, but I forgot it at that point. But I want to talk about it, especially when it comes to people's appetite for the interest rates, right? We're actually in a very good spot from what I know about interest rates, and the COVID rates 3%, 4% was actually like an anomaly. It's not the normal, actually.
Yes.
When you go back over decades, like there were seasons when we had 11%, 10%, 8%, 9%, 15%. So when the rates dropped, the rates were starting to gradually drop over the last, I would say, 10, 15 years. Say post 9/11, we started to see rates gradually drop, and the 3%, the 4% that we saw during COVID was an anomaly. It was like, what? And so if you had a mortgage at that point, honestly, it was the time for you to refinance, if you could, or buy in at that point, which was, I bought in right before COVID. Perfect. And then I refinanced during COVID as well. And so when you think about, so when people look at the 7% and this interest rate now, they're like, man, that's high. And when people ask me, what I tell people is that actually it's pretty good. And one thing that I always tell people is you can always refinance. As long as you can afford your mortgage, you can afford your total payment, taxes, insurance, PMI if you have it, HOA if you have it, and still be able to afford all your other bills and manage all your other debts as well. Like, go in, buy, because there's never a right time. So while Manny is going to tell you, do what works best for you, I'm going to tell you, because I'm not a mortgage loan officer, and I'm here to give you advice as a 9 to 5er. Buy now. If you have the funds with all the factors that I've laid out, buy. You can always refinance.
So, like, to speak on that.
Yeah.
When it comes, like I said from the start, there is no right time. It's when you're ready.
Yeah.
Yes, when it comes to investing in diversification, do what you're comfortable with.
Yeah.
So, just like you mentioned, speaking back on interest rate, rate is going to rate.
Yes.
There's nothing you can do about that.
Yeah.
Well, what it comes down to is, am I ready to buy? Again, when you're paying rent, you're practically paying 100% interest. Think about that. It's 100% interest.
Yeah.
You don't gain
zero
nothing.
equity, nothing.
No equity, no appreciation. If anything, your rent goes up every year.
Yeah, plus all the other fees that they tack on.
I mean, again, not to knock on your landlord or the homeowners that are the investors.
Yeah.
That's just what it is.
Yeah.
It's just
stop doing business.
Correct. And these people, they didn't buy the investment property to lose money.
It's not a handout for them.
Exactly. So someone has to pay the fees. So whether you're an investor or maybe you want to buy a home, primary home, maybe you want to grow wealth, real estate is always there for you. But again,
do what works best for you.
Correct.
So in closing, when you look ahead at like this next 5 to 10 years, what major economic or demographic shifts in your opinion, based on your observation of the markets, do you foresee could reshape the housing market for the new American? And how can our listeners make decisions today to best position them for future financial stability and growth?
Speaking of the current market, there is more home buyers than there is homes. And now, actually, there is a shift right now. At the current market, I would say it's more of a buyer's market. So there's always a buyer's market and a seller's market.
Okay.
And what that really means, so when rate is slightly high, there is less people that is inclined to buy.
Correct.
And with less people inclined to buy, there is more homes on the market.
Right.
And with more home on the market, it means sellers are willing to
drop the
price and try to accommodate the home buyers.
Correct.
Now, what we are seeing in today's market is again, it's not normal. We still have substantial home buyers. And sellers, in most cases, are holding on to their price.
Yes.
And that being said,
which I think is greed, but carry on.
I mean, if you were to be selling your home, would you drop your price, or would you sell for what you think?
I would say at a fair market price.
And this is exactly what every home seller will tell you. We say fair market price. I'm selling for a fair market price. So that being said, the future really. So if rate, again, I don't have a magic ball. If rate drops, what we're going to see is an influx of buyer. With more buyer means there's less home and price increase.
Correct.
And that's what we saw during COVID.
It's a cycle.
Right. And during COVID, there were people paying $50,000 over asking price.
Yes.
$100,000 over asking price.
Yes.
And now coming back to the future. Right. Now the future, if we stay as we are, price will stay stable as it is right now.
Yeah.
And which of course, change is constant.
Yeah.
So if rate drops, we're going to see increase in home prices. And if rate stays as is, of course, honestly, right now might be the best time to buy in regards to the market, because the competition is less.
Yeah.
You don't have to pay over asking price. You pay what the seller is asking and you're good to go. When it comes to the future, again, nobody holds the magic ball on the interest rate itself. The other thing I will touch on is most states are now trying to increase new homes.
I was going to say that.
Trying to increase new homes because there is, again, while
There's
there is
housing
homes on the
shortage.
market,
Yeah.
but there is still housing shortage.
Yeah.
Depending on what market you're trying to buy, most people would not find what they want.
Yeah.
And based on the COVID era of us going through a 2% interest rate, most people who refinance during that era are holding on to their home.
They're not looking to buy now.
They're not looking to buy.
I'm not going to take on a 7% interest rate if I have a 2%.
Correct. The only thing that they are more into, maybe they will take a home equity loan.
Yes.
Or maybe in very rare cases, refinance the 2-3% interest rate.
They need that cash.
If it's detrimental.
Yeah.
If it's detrimental, they may have to refinance the whole picture.
Yeah.
Again, home equity loan does require more higher credit score, more criteria to qualify for it. So it might be the only option to just refinance the entire picture to reset.
Right.
But in very rare cases, those people are living their 2%.
Yeah.
So with that, it's leaving us with a housing shortage. So in the nearest future, you'll see more lands being bought out by developers. More new home constructions. And again, we're still behind even with that. There's a lot of it going on. But we're still behind. So eventually, what I would love to have happen, again, it's not my decision to make. Interest rate drops to about 4-5%. And I think that's the equilibrium in my opinion.
Okay. I like that. I appreciate that. And I wanted to add that, you have to think about it from the standpoint of people are living longer. So with people living longer, they're going to keep living in their houses. And people are healthier than they were 30 years ago, 50 years ago, 80 years ago. And so because of that, we need more houses in production, like you said. And so commercial real estate developers cannot catch up enough. And that's why you probably would start seeing urban development with high rises. And so they're shifting more to pushing people to rent more because that's the fastest way to be able to home people, because we're starting to have people, homelessness increase in like a lot of urban cities. So there's just a lot of factors to consider when it comes to these things. So like Manny said, now is probably the right time to buy. But again, looking at your own personal situation, whenever the right time is for you, you should go for it and look into it, whether it's for your personal primary home or whether it's for an investment. If you have the cash, put it down. Don't let it sit in the bank generating 0.004 interest rate. That is nothing compared to building equity over time. Let's talk about green lending. How can they contact you? Yeah. Okay.
So of course I do free consultation. But again, nothing is free. And in regards to when you consult with me, I expect you to work with me and purchase from me, right?
That is true.
So I don't work on maybes, I work on guarantees. And what that really means for me is I'm committed to the client that is committed to me. Yes, it's okay to shop around, but end of the day, I'm going to be highly competitive for pricing. Yeah. And I'm going to go to bat for you and make sure you get the best loan possible.
Correct.
And that being said, with Green Lending, my branch is located in Cuyahoga Falls. Okay. Our headquarters is in Independence. Getting a hold of me is pretty easy. You can reach out to me on my social media, Manny_mortgage lender, or my LinkedIn, Manny Oloyede, or if you want to get brave, you could call me directly, and that will be in the caption below.
Awesome. That is so amazing. Manny as being very, very instructive and I've learned a great deal. Federal Housing Authority, who knew that? Administration. Yeah, I did not even know. I thought FHA stood for first time home buyer. So I've definitely learned a ton. So some takeaways for me is like, one, start with your starter home. I did. So you can too. You don't have to go for that $1 million house on the lake, the right time to buy is when you are ready. Think about it, because you have to furnish a house. There's so many other expenses associated with owning a home. Like my first year, my roof thing fell out of nowhere. And so we had to do a replacement. So there's just so many other things that you have to factor in when you think about buying a home or even an investment property. Think about your closing costs. Think about, the house hacking idea that he mentioned. That is a great idea. There's several properties. Connect with a realtor. Do you have a realtor that you work with? When you connect with him, he can connect you to a realtor. Connect with a realtor to talk about your housing interests in just different areas around the city. I know a realtor that I use and I really love her. I can recommend her. So reach out to me, Elizabeth, at the 9to5blueprint.com if you want that information. Anyway, remember, you are the architect of your journey. No one else can chart your path for you. It is up to you to make the decisions that you want to get the best out of life. Remember to subscribe to us on all podcast platforms: Spotify, Apple Podcasts, Amazon Music, YouTube. We're on iHeartRadio as well. You can watch the visuals on YouTube at the 9to5 Blueprint. And you can follow us on all social media platforms at the 9to5 Blueprint, and follow the website www.the9to5blueprint.com. Next week, we're going to be talking about another amazing topic. So stay tuned and engage with us. Thank you and bye.